I'm Matt Rudnoff.
Hi, I'm Richard Dennis,
And we're Economists.
Now Matt, question today is, there's so many different types of tax. Is there a good way to figure out what's a good tax and a bad tax? What should we tax?
Well, that's a great question, Richard. And fortunately, we've just put out a paper that discusses this very issue.
God, we've got good viewers.
Yep. So basically, there are all kinds of things you can tax. You can tax profits, you can tax income, you can tax capital gains, you can tax cigarettes and alcohol. There are all sorts of different ways.
Wealth.
We can tax wealth. Well, we don't like doing that so much in Australia. But there are all kinds of ways of taxing. So are there better taxes and worse taxes? And what we've done is we've put together 5 principles that you can use to evaluate different taxes.
So there's not one good tax and everything else is bad?
No. So there's different aspects to a tax that make it good or bad. And so what we're going to do is we're going to have a look at some taxes and we're going to put them through our 5 principles.
Excellent. Let's have a look at those principles.
Okay, so the first principle is the tax should minimise the change in behaviour unless it's something that we want less of, in which case it should be effective at changing behaviour.
What are you talking about, Matt?
Yeah, that's a bit long, isn't it? So basically in economics we think that if you tax something that we want more of, that's bad.
Right, so if I like eating pancakes for breakfast and you put a tax on pancakes, then I might buy less pancakes.
Exactly right. So we tend to think that taxes shouldn't try and change behaviour. So we don't like it when taxes change behaviour.
Except
when
we do.
Yeah, so if we put a tax on, say, cigarettes,
yep.
All right, we want people to smoke less and that encourages them to smoke less.
So we don't want taxes to distort people's behaviour. We want people to decide what they want for breakfast, they want what they should wear, what I should wear. I don't want Matt dressing me. Stay away from a clothes tax man. But when it comes to things we do want to change, like alcohol consumption, tobacco consumption, or maybe carbon dioxide pollution, economists like the idea of using taxes to change some behaviour.
That's exactly right. So basically what we're saying is don't change behaviour for the things that we want more of, and be effective at changing behaviour for the things we want less of.
And can everyone agree on what we want more of and less of?
No, but that tends to be more of a democratic question, not an economic question. You shouldn't ask economists what you want more of and less of. That's something that we should sort of vote on and decide through our parliament.
All right, what's our next principle?
Tax should reduce inequality.
What do you mean by that?
Well, inequality is the gap between the rich and the poor.
Right, so we've got high income earners, low income earners, lots of wealth, no wealth. We want the tax system to kind of push people closer together, not push them further apart.
That's exactly right. And we want to do that because we found that countries with lower levels of inequality, where the income is more evenly distributed, tend to grow faster and grow quicker than countries that have more inequality.
So having a smaller gap between rich and poor is actually good for economic growth.
That's exactly right. Yep.
I thought we had to have trickle-down economics and give poor people an incentive to work hard.
Well, we found out, surprise, surprise, that that's actually nonsense.
Oh, that was a bunch of rich people saying that, wasn't it?
That was a bunch of rich people saying that. I wonder why. The other thing we know is that tax is probably, along with government spending, is the best way to reduce inequality. There's nothing that quite reduces inequality as fast as our tax and transfer system.
Right, so if you want to close the gap between those with the most and those with the least, you can use taxes on high incomes or taxes on wealth or taxes on the activities that high income earners typically undertake to actually close the gap.
That's exactly right.
And it works.
And it works.
Right, okay, it's a good principle. What else we got?
Our third principle, the tax should be levelled on those that are best able to pay.
Right, so is that different from inequality?
Yeah, it is. So basically when you're levelling a tax, the tax should be on something or on people that are actually able to pay the tax.
Right.
So we don't want people having a tax debt that they can't possibly afford.
Right.
So one example you might have is when people might have a large asset, but they don't have much of an income.
Right.
And so if you level the tax just on that large asset, they might have to then sell the asset in order to pay the tax.
So you want to make sure that the liability to pay the tax kind of lines up with the actual ability to pay it when it's due.
That's exactly right. Now, our fourth principle is the tax should be simple to comply with, simple to administer, and easy to understand.
What does that mean?
Should be pretty simple.
So
Now,
tax laws in Australia, there's only a few of them.
yeah, look, it's a very slim kind
Anyone
of
can pick it
act.
up and read it.
Exactly right.
Yes.
We're doing really well on number 4 there.
Let's be clear, complexity is a great way to hide inequality.
Yeah.
Like, rather than say, hey, we've got an uneven tax system, it's better to have a really complicated one where if you can spend 10 grand on an accountant, you can get a good outcome.
Yep. And our final one is the tax should be difficult to avoid.
Well, you mean we shouldn't be able to dodge tax easily?
Exactly right. And number 4 and number 5, there's some overlap there. So the more complex a tax system is, the more loopholes you can create, the better you can avoid a tax.
Right, so a simple tax system, like you hear people like right-wingers always say, let's simplify the tax system. Do they mean get rid of all the loopholes?
They often don't mean that. What they usually mean is let's just tax everybody the same, so low-income earners pay more tax and high-income earners pay less tax.
So the more complex it is, the easier it is to avoid.
That's exactly right.
All right, well, let's apply the principles to some taxes.
All right, what about a carbon tax?
Carbon tax. So we put a tax on polluters, and the more carbon dioxide they emit, the more tax they pay.
Yep, exactly right. How does it go with our first principle? So does the tax change behaviour? What effect does it have on behaviour?
Well, we heard from the polluters that they were terrified of it. It was going to drive some of them out of business. So given that they were threatening that the tax would work, I think we know that putting a tax on carbon pollution was likely to reduce carbon pollution. And then we saw what actually happened.
Yeah, exactly right. So Australia's emissions never fell faster than the 2 years that we had a carbon tax.
And didn't the economy grow while the emissions were falling?
Yeah, well, despite what certain politicians said, yes, the economy grew substantially on those 2 years too. So not only did it change behaviour, but it did it quickly and well.
So for a carbon tax, it was designed to change behaviour, it was designed to distort the market, and it worked.
Yep, exactly right.
Inequality.
All right, so inequality. So the tax is on polluters who then pass it on to consumers.
So the electricity generator that burns the coal pays the tax, but they put up the price of electricity, so people who buy electricity had to pay more.
Yeah, okay, so it tended to be fairly flat, and it was difficult to avoid. So actually, poor people would have paid more of their proportion of their income in this tax. So that wouldn't have been great for inequality.
But we had compensation to assist that.
Exactly right. So when we include the compensation that the carbon price, the carbon tax collected income, and then we handed that back in compensation to poorer people, then that can compensate that change in inequality.
So a tax could be inequitable, but desirable for other reasons, which is why you have a compensation package.
Exactly right.
Okay, what about the third one?
Tax should be levelled on those who are best able to pay.
Polluters make a lot of money.
They do. There are a lot of polluting industries that make a lot of money, and they were certainly able to pay it. They did pass it on. So if you look at it, if it was passed on to consumers who were poorer, then they might have struggled to pay. But then if they were given compensation...
Problem solved.
Yep, so problem solved.
And I don't know if everyone remembers this, but when Tony Abbott scrapped the carbon price, he actually left the compensation, including income tax cuts, in place.
And also, apart from electricity and gas, prices didn't change much at all.
Right.
All right, and finally, second last principle. The tax should be simple to comply with, simple to administer, and easy to understand.
Pretty easy to weigh the coal.
Yeah, it is. So certainly the way they legislated brought in the carbon tax seemed to work pretty easy.
And it was imposed on, again, the biggest polluters were the only ones that were legally liable for it, and that had price effects on other people, but the tax was getting collected from the biggest polluters.
Yeah, so it was pretty simple to administer. And finally, the tax should be difficult to avoid.
Well, it's very hard to avoid. They complained about it endlessly.
Yeah, exactly right. They were so upset about it because they couldn't avoid it.
Right, so carbon tax gets a lot of ticks, certainly can potentially create some inequality, but fix that with compensation.
Exactly right.
All right, how about the GST?
All right, GST is another one, another tax. Should it change? What effect does it have on behaviour?
Well, economists used to worry that the pre-GST sales taxes were on some things and weren't on other things. So a lot of economists were very excited about having a goods and services tax on 10% on everything, so there were no distortions. But of course it's not on everything. We accidentally left out private school fees, we accidentally left out private health insurance, but we deliberately, very consciously, the Democrats did a deal with the Howard government, decided to leave out a whole bunch of fresh food, because again, they wanted a distortion. They wanted to say, no, we want to make fresh food relatively cheaper than processed food to encourage people to do it. So GST, designed to minimise distortions, kind of works in that regard, but we built some distortions in. Encourage people to go to private schools? Well, you know, maybe.
Depends if you own a private school.
Encourage people to eat apples and bananas? Yeah, probably not such a bad thing.
What about inequality?
Yeah, there's a bit of inequality with the GST.
There's a bit of a problem there.
There's a couple of problems, one of which is lower income people tend to spend all of their income and higher income people tend to save some of their income. So when you tax...
Why? Is that because poor people are, useless with money?
Just can't manage their budget, you know, a couple $100 a week and they spend it all. So if you spend all of your income is spent on things that have the tax on them, so you pay a higher percentage of tax. Whereas if someone earning $200,000 a year is saving $50,000 a year, by definition they're not paying any GST on the money they've saved. So goods and services taxes, consumption taxes tend to increase inequality. Again, you can compensate for that with other tax and benefits, but guess what we did over time? We compensated at the time it was introduced with increases in welfare, and then we've kind of chipped away at that.
Chipped away at it, yeah. So it does create inequality. It's what economists refer to as a regressive tax.
Yeah, so the higher income people literally pay a lower proportion of GST than low income people, so it's regressive.
A third one, the tax should be levelled on those who are best able to pay.
What do you think?
Well, the GST was kind of on everybody and it's a flat rate, which tends to mean that poorer people end up paying as a larger proportion of it. So, yeah, it's not great for that.
Okay.
Though, not super bad. It's not like they can't pay at all, but it's certainly going to target poorer people just as much as richer people.
And again, when we kind of use income tax cuts to compensate, low income earners didn't pay a lot of income tax, so couldn't get as much compensation. What about simple?
Yeah, well, I remember
people complained when it came in.
Yeah, I remember when it came in, and before the GST, there was no BAS statements. I remember the outrage.
That'd be a business activity statement, Matt.
The outrage in business for a year or more afterwards, where they were complaining about the extra compliance costs, because usually the government through the ATO collects the tax, but the GST is actually collected by businesses,
and so the business is responsible for collecting the GST, and then they've got to hand it over to the tax office.
And they weren't happy with that extra administration.
No, but after the fact, a whole bunch of people said, we finally actually updated our accounting software and finally started doing our accounts quarterly rather than annually. So a lot of complaining, not the most simple tax in the world, but in hindsight, not that many people complain.
Now it's running, it seems to run fairly well.
Yeah, what about difficult to avoid?
Well, that was the big claim about the GST.
Impossible to avoid.
Yeah, the problem with income tax is there's lots of loopholes and you can get out of it, but anybody who buys something, they're guaranteed to pay GST.
But there's not a plumber in Australia that's willing to leave the GST off if you'll pay him in cash, is there?
That's exactly right. So look, the GST people can get around it, and they have been getting around it. Particularly, with anybody who says, well, I'll do it less for cash. What they're actually saying is, I'll do it less so I don't have to pay GST, and let's split some of that.
Well, how about if you don't pay the GST, I won't pay any income tax. So, one of the main claims for the GST was it was going to ruin what we call the black economy, the cash economy. It probably made it bigger.
Yeah, definitely.
Whoops.
All right, so we can see that we could pick any tax or any proposed tax. We could come up with new taxes and ask ourselves, well, is this a good tax? If we use these 5 principles, we can basically find out how many boxes they tick and how many boxes they don't. And then we can sort of basically decide, well, is it a good tax or is it a bad tax?
And to be clear, different people are going to disagree. And that's why we're putting the principles up, because some people might focus on a carbon tax changing behaviour and others might focus on, but what will it do for electricity bills for low income earners? They're both right. And that's why, while economics has got something to add to these debates about tax, as Matt said before, these are really democratic issues about how do you balance these principles. And different people at different points of time in different countries, guess what? Come up with quite different tax systems. Who'd have thought?
As I said earlier, we've just written a paper on this. So if you want to go and have a look at the paper, it's at our website, australiainstitute.org.au. And not only do we go through each of the principles, but we also have a heap of other taxes that we look at.
Income tax cuts, capital gains tax,
the Buffett rule, estate duties, all kinds of interesting taxes that we look at, and we basically apply these principles to them. So go and check it out.
Check it out.
We make these videos to help you get the facts and engage in the national debate. The best way you can do that right now is by sharing this video so that more people can participate in this important conversation about our democracy.